Hello guys and welcome to Hakmen Traders. In this video I'll be showing to you guys how to recognize exit points at different levels. So an entry point it is the same as recognizing an entry point. Now exit points are also easy to recognize. Sometimes it is difficult, but it requires a profound knowledge about the psychology of the candlesticks. Now I've also made a video about how to recognize certain mm, how to recognize how to know the psychology of the market traders by reading the candlesticks. Now that's also a bit easy, but I'm going to explain this to you with the help of that how to recognize exit points at different levels. So let's get started with the video. Now this right here is I picked up a random chart. Now to recognize exit points at different levels, what you can do is you'll have to use the knowledge of psychology of the candlesticks. Now for this purpose, as you can see that let me yes, right here, this is an entry point. If you've entered at this level and held the stock for quite a long, now you can see at this point this is a great exit point, because you can see, although at different levels you can see that sellers were confident at this level, but again the buyers gain control of the market, and at various points they push the market upward. So if you've exit at this level, that's also great. These are also exit points. You can see that this was low and this is engulfing bullish, so this is also a great exit point. You can see that again, but if you still held into this stock, you can see that this is an exit point, engulfing bullish and engulfing bearish. This is an engulfing bearish method, and after this the market start to come down. There are also another method to exit a certain trade. This is by the method of trailing stops. This is the method of trailing stops. If you've used trailing stops, now let's say you've held the stock for quite a long and exit at this level, so this is a great exit point. You'll have to move this stop along with the direction of the trend. Now take a look at this point. Let's say you have held in at this point, held it at this level, and then it start to come down. You have exit at this level, so this is also a great exit point, because you can see that with this method, if this method is too far to recognize the psychology of the candlesticks, this is the easy method to recognize to exit points. So you see, whenever use this as well with along with the psychology with the psychology of the candlesticks as well. As you can see that this is engulfing bearish, the stock start to come down 3, and this also appears, the doji star. Where is it? Yes, the doji star also appears at this level, so this clearly shows that this is a downtrend, and after this the market start to come downward. So these are great signs to exit at this point, and you should exit at this point, because you can see that this is a great exit point at this level, that it shows that this is this will now turn into a bearish market, and it did turn into a bearish market. After this, now again you still held in to your cash, and let's say you've entered at this point somewhere here. Yes, right here you've entered at this point, and as the stock is moving upward, moving trading, it start to move upward, and you've held this as well along, went up 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 up, and now again at this point you have exit, you've moved it up till this point, so you have exit at this level. So this is also a great, because you can see that at various points the stock here shows, the stock at this level shows great resistance. Let me mark that out. It shows great resistance at this point. As you can see that this was a great resistance level. Price rejected once, twice, thrice, and 4 times, and especially at this one as well 5 times. The price got rejected 5 times at this level. So what it means at this point is that the stock here is the stock here would turn into a bearish market. So at this point you should you should exit at this level, because you can see 4 price rejections happened at this level. The price got rejected here at 4 times, so you'll have to whenever the price rejections occurs at these points at in this amount, so you should exit at this point. Now for entry point, you can see you can enter at this level. Price got rejected on the downside. You can see the bulls rejected the price from going further down because they said this was a price too low to pay, and you can see how strong a bearish candle it was. And this a strong bearish candle also shows that the bulls are exhausted at this level. If this candlestick appeared at somewhere these areas, I would say that the bulls are now ready to gain control of the market. But as it appeared downwards, 3 or 4 candlesticks appear, strong bearish candlesticks appear. This is also known as 3 black crows. So 3 black crows appear at this level. You can see that now the bulls are exhausted at this level and the bears gain control of the market. They start to push the market up or now. For a while it is trading in a side trend, and now we will see how far it goes. So this is these are some of the methods of how to recognize strong exit points. So you can use different indicators, different signs, or different strategies at different points to recognize these exit points. So you can see I've used the resistance level at this point, and for the most of the part I've used the trailing stops. The trailing stops is also a great method to use in this case. You can enter and exit at various points by using the trailing stops method. That's also a great method to use while trading in the stock market. Now what about this one? This also shows the same thing. Apply the trailing stops method for as much longer as possible. You can see at different points, if you face difficulties while recognizing or trailing while recognizing certain uptrends or downtrends, you can use the trailing stops method. That would help you in recognizing exit points clearly. Now you can see at this level in the history, this was the support level. This is also a support level, but this is a false breakout, and this is the real support level. And after, as it broke this trend line, now at this point it becomes a resistance level. So you should exit at this point. I'm just explaining this to you guys so that you can learn how this entry and exit points work. So now again it dropped, start to move upward. Again it moved upward. Now it is still trading upward. So it has crossed the resistance level, and now it is trading upward in the upward direction. So you should use different strategies at different points, because these strategies are very useful at different levels. So to recognize entry and to recognize exit points, you will have to go for this. For that purpose, you will have to go to its history. You will have to go back in history to know where is the. Now it appears right here. This is the resistance level. So you will have to match this with this. And for exit points, this is the resistance. This is the support level. For entry point, this is the resistance. This is the support level. This is a great exit point, entry point. Sorry, you can see I've clearly defined all of these to you guys clearly. You can also use if you want the RSI, relative strength index. You can also use that as well to recognize your entry and exit points. Now you can apply the same method, the resistance level method in this case as a support, and resistance level in this case as well. But the simple method is that when it reaches to its to this overbought zone, sell and buy when it is at its oversold area. So these are different indicators that will help you determine entry and exit points at different levels. And that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.